Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Using moving averages to find winning stocks. That's what this week's screen is all about. And Kevin Matras, our top stock screener here at Zacks, is going to fill us in on the details of how we can do that. Sounds to me like it employs technical analysis.
Yeah, absolutely. You know, you don't really have to be a technician, though, to be able to use moving averages effectively. It's pretty straightforward and very easy to understand.
Okay.
But I think now, with the stock market in a larger downtrend, but so many stocks recently going back and forth and, chopping around, it's kind of difficult to determine what a stock's current price trend is. So I think right now using moving averages is a key measure that can really help you discern what the short-term direction of a stock is and maybe even what the longer-term picture of a stock truly is.
First thing you have to do is understand what a moving average is, because there's a few different types, right?
That's right.
Short-term, long-term?
Yeah, there's shorter-term moving averages, longer-term moving averages, and as the name suggests, a shorter-term moving average will give you a gauge as to what the shorter-term direction of a stock is, whereas a longer-term moving average will give you kind of a big-picture view.
So we're talking about price average?
Yeah, you're talking about the moving average for the price. A good example of a longer-term moving average, though, would be the 200-day moving average. Mm-hmm. And a lot of institutional traders, portfolio managers like to look at this. For instance, if you were to look at a stock and you see that the price goes below the 200-day moving average, that would be considered bearish, and in general, a lot of people will look at that as a sign that the trend has changed from up to potentially down.
Okay.
If you look at the 200-day moving average and you see the stock come down and hit it and then bounce off of that, that would be considered bullish because that 200-day moving average is now acting as a support level. Mm-hmm. It's kind of like a moving trend line, if you will.
Okay.
If you take a look at the 200-day and the stock goes above it, just like if the stock closes below, or should say pierces the 200-day moving average on the way down, that would be considered bearish. If, in fact, the stock were to pop through the 200-day moving average and start to go higher, that would be considered bullish, and that could be considered potentially the beginning of a new uptrend.
And there's a 50-day moving average too, right?
That is right. Now, the 50-day moving average is considered more of a medium-term moving average, give you kind of a medium-term outlook of what the stock is doing. So just like the 200-day, if the stock is trading above the 50-day moving average, that would be considered bullish. And if the stock is trading below the 50-day moving average, that would be considered bearish. Then, if you're looking at something that's more short-term, like we were just talking about, a shorter-term moving average will kind of give you an idea as to what's going to happen over the immediacy, if you will. And a 10-day and a 20-day moving average is a great example of a short-term moving average. And I think one of the best ways to use the 10 and the 20, or any kind of short-term moving average, is to be able to look at the crossover. So if you're looking at the shorter-term moving average, the 10-day in this example, trading below the 20-day moving average, which is the longer-term moving average, mm-hmm. If the shorter term is below the longer term, that would be considered bearish. But then, if it crosses over and the shorter term is above the longer term, 10 above the 20, that then would be considered bullish. So looking at these different types of moving averages and different types of crossovers can really help you discern what the short-term, medium-term, and long-term direction of a stock's trend really is.
But do you have to look over many, many charts, like a ton of charts, to get all this information?
Fortunately, you don't have to. I mean, you can use a screener to help you find the stocks that meet the certain criteria. But again, I do want to say that you shouldn't just be looking at moving averages as a be-all to end-all. It shouldn't be used in a vacuum. But if you were to combine technical analysis like the moving averages, and you're looking at stocks that does have good fundamentals, that have solid earnings estimates, upward revisions, and this kind of thing, mm-hmm. That can really help you find stocks that are bucking a longer-term downtrend, find stocks that are moving higher, and really help you find the resilient winners.
All right. Well, we promised everybody a screen, so what are the parameters for this one?
Well, the screen I'm running this week is pretty straightforward. I'm looking for companies that are trading above their shorter-term moving average, which is the 10 and 20-day. They have to be trading above their medium-term moving average, which is the 50-day. And I also want the stocks to be trading above their longer-term moving average, which would be the 200-day moving average. Moreover, I want to make sure that the companies have a Zacks rank of a 1 or a 2, which means it has to have a strong buy or a buy from Zacks. And also, importantly, I want to make sure that the companies have a positive projected growth rate. There has to be some meaningful reason for the stocks to go higher, and I think that this is one of them, especially in this very, very difficult environment.
All right, give us an example of one that came through the screen.
Yeah, one of the stocks that came through this week is a company called Aero Environment, ticker symbol AVAV, and they design, develop, produce, and support an advanced portfolio of unmanned aircraft systems and efficient electric systems with customers like the United States Department of Defense, Allied Military Services, and this kind of thing.
Cool.
If you take a look at it, though, you can see they came in with a Zacks rank of a 2, which is a buy from Zacks. Their projected 12-month EPS growth rate is over 14%. They posted a 51% positive EPS surprise their last time out, which is pretty impressive. And they actually are trading in the top half of the Zacks ranked industries. And as we have said before, time and time again, that focusing on companies that are in the best industries, that can actually put the wind at your back, if you will. And if you look at this chart, you can see it looks pretty good. They are trading above their short-term, medium-term, and longer-term moving averages. Stock looks very good.
Do you own the stock?
No, I don't.
All right, we need to move out here for time, but if you want to read more about this particular screen, or maybe look at an archive of some others that Kevin has written about in the recent weeks, and you're accessing this video outside of Zacks.com, then get on over to our homepage, Zacks.com. It's very simple, Zacks.com, and scroll down that homepage until you get to the most recent headline for Screen of the Week next to Kevin's picture. It'll take you right to the text version of this particular screen and then an archive of some others. Kevin uses the powerful research wizard to achieve all of his screens that he talks about here and that he writes about, and you can learn more about the Research Wizard at Zacks.com/Research Wizard. We make it easy for you. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.